This is Alison Tudor with Finance Asia at Super Returns 2014, and I'm here today with Kunal Shroff, Managing Director at ChrysCapital. And I'd like to start with asking you, is this market euphoria that we're seeing post Modi's election really warranted, in your opinion?
Sure, I think it's a good question, Alison. It's, when you use the word euphoria, it clearly sounds like hope is running ahead of reality, and we do think so. So when you think of it from a market perspective, markets have clearly moved up in anticipation of what the good days ahead can mean. If you look at the fundamentals of the business, we think there's still a lot of challenges on the ground, but the markets always look way into the future. From our perspective, we do think the markets have run up a little too quickly, anticipating a change. From another perspective, if you think about it, India has been in a funk for many years. So if you had to look at it, you could say that the only direction is up. The election has clearly given a clear mandate to development, so people are very hopeful that it will reverse the paralysis in policy that has gone on. But I think it's going to take longer for it to actually manifest itself in companies' numbers, in growth, in employment, in a variety of metrics that people are going to look for. I think if you compare India to other geographies, you probably got 5 years of underperformance being reversed in India, whereas in other geographies, if you look at the other BRIC nations, there are some challenges after a very strong growth spurt. Whether you look at China, Brazil, or even Russia with some of the challenges there. So I think relative to other emerging markets, India may be in for a sweet spot from a 5-10 year perspective, and as investors who focus on India, we do hope so.
What about private equity's sweet spot in India? And what do you think the returns, net returns, are going to look like a few 5 years out?
That's a good question, because the GDP can mean something else and private equity returns can mean something else. If you look back and look at the historical growth, India has had decent GDP growth rates, but overall private equity in India has not delivered good returns. That's the constant refrain when you go to conferences and when you listen to LPs. Private equity sweet spot, I think, is in a number of sectors which have done well, whether or not the government is pushing for it or not. So for example, when we look at ChrysCapital, some of the sectors that have done very well for us are IT and pharma, which don't really depend on the government. So whether Modi is in power or another government, we think there's good legs for growth in that sector. We think financials and the leveraged sectors will do very well if the government really gets on the reform path. And so the valuations and the market moves that you're seeing is in the more leveraged economies, which have suffered a lot and feel that there's upside now if things clear up. In terms of net returns, I think it's a bit of a challenge. There's a currency involved as well, because most people have to report in dollar terms. We would expect that the next 5 years will be much better than the last 5 years, but nobody wants to talk about the last 5 years. I would say that if you get high teens returns in net to LPs,
high teens
net after all your fees, I think that would be a good outcome in dollar terms.
Understood. And I was going to ask you, how do you differentiate yourself these days in India?
Sure, it's a good question. I think India, because the performance of private equity has been a little bit weaker, I think it's been harder to raise capital. So fundraising for an India dedicated fund has come down, and the larger funds are looking at larger ticket deal sizes. So there's a little bit of a reduction in the dry powder available in the, let's say, the $30, $40, $50 million ticket size. In terms of our differentiation, we're a very sector-focused organization. So we've been covering our sectors for 10 years, 15 years in some cases. We've made multiple investments, multiple exits. So I think entrepreneurs look at us and say, hey, these are the same guys who've been covering the sector long enough. They have some success stories. There's some lessons learned that I can benefit from. And so if everything else is equal, they would like to work with us. It's still a hyper-competitive market where the entrepreneur calls the shots. So you need to pay up. But I think this is how we try to differentiate ourselves, by talking their language, covering the sector, meeting companies well before they're looking to raise money, and positioning ourselves.
Thank you very much. That was very interesting.
Great.
This is Alison Tudor at Super Returns.